Welcome back to the show, everybody. Let's take a look at this. This is Jerome Powell, and this is the global stablecoin arrangement from the Financial Stability Board that we covered in October. You're about to hear this guy who heads the Federal Reserve talk about global stablecoins becoming systemically important overnight. Somebody roll that beautiful intro.
This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow me on Twitter at BackupBradleyAbove at the top of the screen and everything that we're talking about here today. Now, before we get to those fire comments from the Federal Reserve Chair-Jerome Powell, let's talk about something else that is very, very big and a very big deal. This is from XRP Crypto Wolf. Tether's bank says Tether's bank says it invests customer funds in Bitcoin, prompting new questions about whether the dollar-pegged USDT stablecoin is actually in any way backed by the leading cryptocurrency. Yikes, caramba. First of all, we're going to take a look at this article very quickly here because it's important we do so. I cannot stress the importance of this lawsuit with Tether and Bitfinex here, which can hugely affect the entire crypto market as well as Bitcoin. But here we need to understand that Deltec, Tether's Bahama-based bank, announced Thursday it's investing customer funds in Bitcoin. Oh, really? The announcement made by Deltec Bank and Trust Chief Investment Officer Hugo Rogers during a year-end review video raises new questions about whether the dollar-pegged Tether stablecoin, which is in theory backed by cash and cash equivalents, remember that, as well as other assets and receivables made by loans, is actually backed in any way by Bitcoin. They say we bought Bitcoin for our clients at about $9,300, so that worked very well through 2020, and we expect it to continue work well in 2021 as the printing press continues to run hot, Rogers said in the video. Now, there are other issues and concerns that are really claimed in this lawsuit as well. Some of the other things, or at least one of the other things, is that Bitfinex had been covering up the losses by borrowing from Tether's reserves because they had some accounts frozen and seized for payment processes and bank accounts. So there are a lot of problems here. Now, this is not me saying this is what happened. This is me entertaining the idea of what they're claiming in the lawsuit. And I've done a little layout here just so you can simply understand what one of the things and issues may or may not be here. Investors come to the market and get Tether. Then they go off and they buy whatever crypto they want. A lot of times it's Bitcoin. Deltec holds the reserves to back up the cash equivalent for USD Tether. What one of the allegations is that they are in fact holding Bitcoin as a part of that cash equivalent or other assets to make up the one-to-one ratio. If in fact they're holding Bitcoin to balance out that account, what you're seeing them print Tether, basically the assumption is out of thin air, and then watching them go buy Bitcoin with it, and then even holding it in the reserves to keep your one-to-one peg right. This is classic market manipulation and fraud, if true. If true. But there seems to be many more issues than just that issue. But I just thought I'd lay that one out because if that one's true, boy, that's a toughie, right? That is a toughie. I mean, why is it such a big deal? Well, it's a big deal because Tether is essentially, there is USD coin, but Tether has been really out front and running the market, being, the on and off ramp to the whole crypto space. Now, again, you can get PAX or you can get USDC, but in market share, what they have compared to Tether, is not even close. So if this in fact goes through and they cannot really satisfy that this is not happening, oh my, what a wonderful time to introduce that public and private relationship between the government and the private sector for a digital dollar, wouldn't you think? Moving on, we see here understanding that Tether and obviously indirectly may, possibly, I want to caveat that, it's not been proven, but, it's obviously believed widely. But nevertheless, here, we're going to wait and see what the law says. But I just want to be clear that it does look like, well, it looks like there's a plan to save Bitcoin from doom after all. Barry Silbert says, I guess the secret is out. Foundry Services has launched what will soon become the largest U.S.-based Bitcoin mining pool. Listen to this line. It is time for Bitcoin hash rate to come to the U.S. Oh, boy. I tell you, we've been talking about on this channel for a long time. One is, I believe that they're going to have to set up some kind of structure to bring that hash rate to the U.S. Absolutely, that's true. Just like he said. And we've talked about it here. And the potential that you may see proof of work either get some kind of carbon tax put on the miners, whoever mines it, or maybe it's even a cap gains tax and it goes on the XRP ledger as money. At the end of the day, I firmly believe that what we're moving towards is a protocol that is adopted to move value on the internet. Maybe more than one. Maybe it's XLM Stellar's protocol and the XRP ledger. But I certainly believe the XRP ledger is a part of that. And when we look at that idea and notion, it would make sense that you would want to get the hash rate and that energy to mine it back in the United States so you can understand exactly what's going on. And you ask yourself the question, well, how do we know what was mined in China versus what was mined in the U.S.? Well, you make them put it on the ledger. That's how. And if you don't put it on the ledger, there is a internet that you and I use, and there's also the dark web. This is where we're going here. You're going to have the legitimate market, and then you're going to have the black market, what is the equivalent of the dark web, right? So the reality here is that I'm not interested in being in a dark web. I'm not interested in being in a black market. I want a legitimate market. And if I want to own Bitcoin, I want to make sure I own a Bitcoin that somebody's not going to tell me 6 months from now it's invalid because they don't know where it came from. Yeah, that dog don't hunt at my house. So when we get here, Coinbase is pegged for a valuation up to $75 billion. Is that realistic? I don't know, but I tell you what, I'd believe it with all the crypto I've seen bought up in the last few weeks here, because even with all the lawsuits flying around like Tic Tacs in the room, at a bad breath convention, the reality is we're still sitting over $1 trillion market cap this morning, I believe. Matter of fact, let's not even guess at that. Let's just take a look here. Yeah, we're sitting at 1.07 trillion. So that's where we're at this morning. But you know what? Let's talk about something else, because it's time to shift gears. This is Jerome Powell, the head of the Federal Reserve, and he is about to discuss global stablecoins, which we have been talking about here, for which they have the definition of, for which they have supervision of, for which they have a regulatory framework, all on an international level for. But they haven't told us yet what it is. So which one it is, right? So let's listen to what he says. This is some powerful comments he makes right here, talking about CBDCs and a global stablecoin. Listen.
I'll say something about CBDC. So we don't have an explicit plan to do what you articulated, but since we are the world's reserve currency, we actually think we need to get this right, and we don't feel an urge or need to be first. We have effectively, it means we already have a first mover advantage because we're the reserve currency. So,
well, let's understand right now that was a pimp move, and the face you're seeing right now is him just going, "I'm Big Daddy Pimp. We already got here. We're the first one. We are the global reserve currency. Let the rest of the world get themselves together." we'll let you know.
And I think there are both benefits and potential costs and unresolved questions around CBDC. And so we're committed to, technology has made this possible. And, it's effectively private sector actors can create the equivalent of digital money. We know
USDC, he's leaning in and just kind of grazing the issue that Tether is an issue. Listen to this.
That in the past, when private sector money, the public sometimes just thinks of it as money, and then at some point they find out that it's not money, and that.
Maybe the Tether lawsuit reference right there. See, this is how they do it. If you're from the street, you don't really see it. I come up on the street, right? So, but I've learned to see it through the academic speak and the professional polish they all have on one another. And this here is that right there is just simply, that's a way of talking about something without actually saying it at all.
That's a really bad thing we need to avoid. So we're going to look at it very, very carefully. And, we're investing heavily in understanding the technology and analyzing the policy questions, the many policy questions that come. We will also do, as we go through this process, we'll do a great deal of outreach to every constituency that would be interested, including, elected representatives, including financial sector participants, including, as we did with the monetary policy review, the people we serve, to try to understand what are the use cases, do we need this? How would it help? What are the benefits? And I think all of that will inform our thinking as we go through it. So I think we're determined to do this right rather than quickly, and it will take some time. I think it'll take measured in years rather than months. But
before the next question begins, he's saying years rather than months, but he leaned in earlier at saying, we could do the public-private relationship to cover that spread until they feel like releasing something, right? And so it's not saying that it won't be anything, right? You're going to see the USDC coin and Pax coin and those things work and operate in a manner that allows us to move forward without the threat of something like, I don't know, Tether being an issue.
I would say, since it's possible and private sector is already kind of doing it, I think this is something we need to take very, very seriously.
But to make sure that private sector is moving ahead, not spilling over and creating some risks for the Fed to have to step in ex post, I guess.
Yes, there's a need for, and we've been very focused, as you know, on better regulatory answers for potential global stablecoins in particular. So that's been a high-level focus, and that will continue to be a high-level focus because they could become systemically important overnight.
Did you hear what he just said?
People we serve, to try to understand what are the use cases, do we need this, how would it help, what are the benefits, and I think all of that will inform our thinking as we go through it. So I think we're determined to do this right rather than quickly. And it will take some time, I think. It'll take, measured in years rather than months. But I would say, since it's possible and private sector is already kind of doing it, I think this is something we need to take very, very seriously.
And I'm just playing this clip again for you. And when he does, I'm going to roll something in front of it so you see some like a FSB report.
But to make sure that private sector is moving ahead, not spilling over and creating some risks for the Fed to have to step in ex post, I guess.
Yes, there's a need for, and we've been very focused, as you know, on better regulatory answers for potential global stablecoins in particular. So that's been a high-level focus, and that will continue to be a high-level focus because they could become systemically important overnight, and we don't begin to have our arms around the potential risks and how to manage those risks, and the public will expect that we do and has every right to expect that. So that's something that we've been working on with our colleagues around the world, and that will go on as well.
And this is exactly what they've been working on: global stablecoin arrangements and the regulatory, supervisory, and oversight challenges raised by them. The only question left now is which coin actually qualifies to be a global stablecoin. You know, it's interesting when you come here to the glossary of global stablecoin, a stablecoin with a potential reach and adoption across multiple jurisdictions and the potential to achieve substantial volume. A little different than just a stablecoin, which is a crypto asset that aims to maintain a stable value relative to a specific asset or a pool or a basket of assets. Now, it's interesting because you could see XRP be backed by multiple assets. That's exactly what David Schwartz had talked about being able to launch stable coins off of the XRP ledger and certainly being able to collateralize the ledger, let's say with a portion of Nostro accounts from the central banks and payment providers and remittance companies and small medium enterprises that have a need to carry Nostro Vostro accounts around the world and to take a percentage of those and place them on the XRP ledger to create a floor value for the asset. Now, that could be a multi-asset backed stable coin. And because we know that it has been designed that they could launch stable coins and issue CBDCs and stable coins off of the ledger, and that the compliance and regulation for each country can simply be placed into this thing. And in a lot of cases, all of that is built in for them to use already. And it's really as simple as almost like plugging in with an API. And off to the races the countries go. And when I think of that, then you're talking about being able to have reach and adoption across multiple jurisdictions and the potential to achieve substantial volume. And therein lies the component that has always told me XRP fits that bill. Now, don't just take my word for it. Let's listen to what Daniel Arande says as managing director of Europe and Ripple, courtesy of Darren Moore. But listen to what he talks about when he talks about the kind of market they're after and what's going on in daily transactions here. Listen.
And so, you know, where can Ripple go beyond just cross-border payments? One, we think cross-border payments is a huge market. I mean, you know, total FX volume, so foreign exchange volume, like just, you know, different currencies that move around the world every day is about $5 trillion on a daily basis, on a 24-hour basis. So that's huge. That's a lot of money that moves around the world.
And that's the guy from Ripple, managing director from Europe Ripple, telling you what they're focused on. It's a $5 trillion a day problem right now. And we know for a fact that Jerome Powell now talking about global stablecoins and the fact that they can become systemically important overnight, a la price set. All right, that's going to do it for me. Hit the like and subscribe. Leave a comment below. Share with somebody you know. Make sure you hit that notification bell so you don't miss a thing. Also, check out the links in the description box and the comment section for anything that you may want or need. They are trusted, vetted links of products and services that I use each and every day. I'll catch you on the next one.